Welcome back, traders. A small initiative from my end to share as much as knowledge, trading related knowledge as possible. So, I have named it as a trading mantra. So, last week I have asked a question in my Twitter handle regarding the long weekend to discuss some topics. I have got few topics related to how to trade in sideways market or how to determine sideways market. So let's look at a new term, or few may be familiar with this, a term called value area. So let me explain in a shorter form because this is a very big topic. A small introduction: what is mean by value area? Value area is nothing but very simple, where 70% of trading auction takes place on a single trading session. 70 percentage of trading auction takes place. For example, let's assume this is day high of some trading session and day low of a trading session. So in this entire trading session, 70% of auction development which takes place with volumes. Remember, with volumes we take it as a value area, and for that value area there will be two terms: value area high and value area low. I will not go in depth about what is value area high and low. So now we will focus on a term called value area. So which is on an 100% of trading session, 70% of auction which is getting developed comes under the category called value area. So who will be participating more on this value area? So this today's value area topic will help us to identify sideways, understand whether the market going to be sideways or trending, and second foremost, how and in what manner we can take a trading decision even in the sideways market. Because generally sideways markets is kind of an enemy for an option buyer and a friend for an option seller. So let's look at who will be in more control inside value area. Both buyers and sellers will be in control inside value area, because when I say 70% of auction development, 70% means buyers and sellers, both the participant will be actively trading inside those 70% of the range on a trading session. So let's look at some examples about value area, and also let's look at how to take an approach in finding the sideways kind of a market. So all the box which I have marked here is every single day's value area. So this is a 30-minute time frame chart. Every single day's value area I have marked it in a box. Now remember, for upcoming trading session, let's assume on Tuesday upcoming trading session, very important here is first and foremost price. This is last day, this is Friday's trading session. Price, unless until is trading inside value area. So this is the range, this is the value area high and value area low. This is a 1x trading session or trading session of March 25th. This is value area high and value area low. Very basic and simple logic is, unless until price is trading inside value area, more possibilities markets will be in a sideways mode, or I can tell in a simple terminology, a balanced market. So generally balanced market, this is one of the basic way, simplest way to identify or understand whether market gonna be in a trending mode or in a sideways balanced mode. See, let's take an example quickly before moving on to further explanation. Let's take a simple example. Look at Friday's trading auction. We have this previous day's value area here. This is one more 2 days back value area. Now look at where price is roaming. So we got an opening here. This was the open for the day. Let me just slightly zoom in and show you. This is 30-minute time frame, okay, not 5 minute, 30-minute time frame. So we have value area. Very important is the whenever price is approaching any value area, it should be untested. That will be more important. For example, on this trading session, this is value area, this entire range is value area. Only half portion of the value area got tested and price came down, reversed back, and price started moving towards downside. So still we have this half portion left over the value area which is untested. So this is more important. Likewise, forget about this trading session. Unless until this trading session was not there, this entire value area, the price as tested, this is value area, only this portion of price has got tested. Even price crossed beyond this portion but reversed back here, so still that is active. So only this zone is tested. We have full entire left over zone of value area. So what is happening here? Price opened here. Price started roaming inside value area, inside this 2 days back value area. What I have mentioned is, whenever price is spending more time inside an untested value area, more possibilities. This is from my experience. There is no 100% rule that for sure market will be sideways. And very important, this is not a live market, this is an aftermarket chart. Now you can say, sir, everything looks fantastic in aftermarket, but reality is live market. That is why if you want to get more update on live market, you can be part of my Telegram channel where I provide live market commentary, live market update. And very important, I don't run any paid services. Okay, whatever I am sharing as of now till now, everything is free. Okay, moving on. So one simple term which you need to remember is, unless until price is trading inside an untested value area, more possibilities market gonna be sideways. Because for a price to be in a trending upside or a trending downside move, price should shift from balance to imbalance mode. There should be a shift in the mode. There are only two possibilities in the market. Either price should be in a sideways or it can be a trending can be many ways. Like this trading session on current monthly expiry, morning it was a downtrending, next is what it was an uptrending. This is a trending market. But sideways market will be same, it will be up down momentum, simple. Okay, there are only two major mode in the market, that is balanced and imbalanced mode. So now most option buyers enemy is this balanced market. Because even though you are correct, let's assume you have taken a call option, you have bought a call option, price is moving up down up down up down, but still when you have entered the call option, let's assume the future price was 33,400. Okay, price is moving up down, there is no clear direction either on the upside or on the downside. So after 2 hours or after 2.5 hours, you are holding the same call option with placing a stop loss. What is more frustration creating is, stop loss will also not get triggered. Price will move up and it will come down, price will move up and it will come down, it will be sideways. This is major disadvantage for an option buyer. So once you have taken an entry, future price would have been 33,400. After 2 hours, 2.5 hours, future price will be for 33,460 or 470. But when you look at the option price, it will be at your cost or you will be in a minor loss. Why? Because premium decay. Theta is not in our favor because price is in sideways mode. So now once we understand price is inside value untested value area, that is very clear. Minor or one hint which we are getting is that markets gonna be more chance markets gonna be in a sideways mode. So if you're an option buyer, you need to plan accordingly. Okay, price is roaming inside previous days or multi-day untested value area, so we need not to be in a hurry to plan an aggressive option buying or aggressive option selling. But on counter side, for an option seller, This kind of day when price is more spending time inside value area, that is where option seller should be more participating, because possibilities are there, the markets can be sideways, theta decay is possible, option premium can get eroded. Same way for an option buyer. So now we are speaking more about balanced market. There is one more mode in the market, that is imbalance, or I can tell you in a simple term, balanced market can be taken as sideways, okay, and imbalanced market can be taken as trending, okay. Now for an option buyer, how to identify trending market? Again, this is a probability, there is no 100% rule, this is just a probability, because for an option buyer, especially an intraday option trader, premium erosion, or a simple terminology theta decay, should not affect much. Smaller minor effect will take place, that is not a big deal, but major effect should not be causing an option buyer to lose money. For that, whenever price is outside value area, then there might be a possibility either market can be trending or market can give a volatile move, up down move, volatile move. Like for example, let's take an example here. Look at this, from morning price was moving down. Now look at an example here, we are looking at an example. This previous day's value area, now opening was outside value area, and look at the auction, more time price is outside value area, outside previous days value area in comparison. So it is giving an hint that price is outside value area when compared to previous day. So it is clearly giving an hint that the buyers and sellers who are fighting here, up down move in this trading session, as I mentioned, inside value area, both buyers and sellers will be more actively participating. So the both buyers and sellers who are fighting yesterday, today what is happening? Price is moving outside value area and it is drifting towards downside. So it is giving an hint that morning sellers are trying to more participate to push the stock price down. Not the yesterday's buyers. Yesterday's buyers are not showing much interest to continue the price into sideways. So now price is outside value area. So it is giving a kind of a trending option. So either it can be a trending option, or secondly it can be a volatile, like down move, sudden up move, again a down move, sudden up move, again a down move, sudden up move, which is happening in current market scenario. I will show you in a 5-minute time frame. Okay, how volatile move is coming. One candle move, one candle suddenly bank nifty shooting up 200-300 points. How it is happening? That is called as volatility, or I can call less liquidity pushing price easily up and easily down. Now can you understand a basic intro about how we can avoid a sideways market, or as an option buyer how to be safer, playing a safer bet when price is more inside value area. If you are an option seller, it is way fantastic that when price is inside value area you can get maximum premium decay or theta decay. Now let's take one more example here. This is previous day's value area. Next day, what is happening here is, this is previous day's low, previous day's high. Okay. Now interesting here is, price is making a small minor gap down opening. When compared to yesterday's, this is yesterday's close, we are getting a opening here below previous day's low. Now price is outside value area. What we are getting here is, price is moving down, sudden down move, this down move which is almost 500 points. Okay, again an up move. Price is, remember, price is outside value area when compared to previous day. As I was letting you know, trending moves possible or volatile moves possible. If volatile move is possible, option buyers can, there is a chance, more chance they can even make money, because price is moving up and quickly moving down. This quick move, if you manage to capture this move by buying a put option, then there is less possibilities of premium decay in this move. But interesting, still option sellers can favor, because price is in a tight range, not a trending move. We are getting just volatile up down move. Still option sellers can make money here, but one in which we are getting is price is outside value area, so less possibilities of sideways option. This is again, I'm telling, this is not 100%, this is from my experience, again a probability. Okay, so there can be different scenario, like this previous day's value area, and on the next day, now the next day, look at the auction development. We are splitting this value area into two halves, 50% and 50% upside and 50% downside. Now remember, yesterday's auction, on later on in the second half of the market, this is 30-minute time frame, on the second half of the market, slowly steadily price is moving down and we are getting a close near day's low. So this is giving a small hint that sellers have taken more control into the auction on the second half of the market. Morning buyers were trying to push price ups. On the second half of the market, we are getting a small hint here is sellers are trying to take control of the auction. Now very important here is, on the next trading session, as I mentioned, now we are splitting this value area into 50% on the upside and 50% on the downside. Why? Because on the second half, sellers have tried to take control of the auction, so only they have managed to close the market near day's low. And on the next trading session, very important here is, if sellers are, this yesterday's sellers are really stronger, they should not allow the price to cross this value area, because value area is the zone which I have already mentioned, both buyers and sellers are more actively showing interest to participate in the market. So now if the sellers are really stronger, they should not allow the price to cross and go beyond this previous day's value area. But interesting here is, they have not even allowed the price to cross above the 50% of yesterday's value area. But still price, on the next day, price has opened inside value area. Now you can ask me a question. You have already told that inside value area means sideways, but we, every time we can't expect inside value area means sideways. We need to look at previous day's auction, because on previous trading session it is clearly sellers who have pushed the price down. It is seller dominance is there. On the next trading session, to check or to identify, because whether the sellers are so stronger or not, because here what happening is, next day price has opened inside value area. If price has made a gap down opening and it would have went down, means it is very obvious this yesterday's sellers are coming in and dominating from the opening tick. But this has not taken place. What has happened here is, price has opening inside value. So important to look forward is how sellers are reacting. If the sellers are really stronger, they should not allow the price to cross and auction above previous day's value area. But interestingly, what they have done is, they have not even allowed the price to cross more than 50% of the value area itself. So this is giving a small hint that sellers are still active in the market. Now what is happening? Price is going into a sideways territory, where in the selling location, this is seller's location, in the selling location price going into sideways. Now decision making here is, if you want expecting the price to go up, bullish expectation, this is a mistake. Why? These sellers are still active. They are not even allowing the price to cross 50%. Bullish view is very dangerous here. Either you need to be bearish, or definitely there is better possibility you need to be bearish or moderately bearish, but becoming bullish here is something a mistake, because charts are clearly showing prices in the selling zone, value area 50% itself price is not, buyers are failing to cross what I mentioned inside value area. Buyers and sellers will be active, so price until here, this is value area low, previous days, this is previous days value area low, price was inside value area na. What buyers are doing, if they are really strong, they should have crossed and auction higher. No, 50% itself is not crossing, they are struggling, buyers are struggling. Always remember, prices in the selling zone, buyers are struggling. What is fake, what is showing us market, what is showing us is selling or bearish mode, not a bullish mode. So being bearish here is the only best option here. So what happened is, price gave a trending move. Now remember, trending move came outside value area. This is, I am marking this previous day's value area. Trending move came outside value area, that is balanced mode shifting to a imbalanced mode, which end up giving us a trending move. Can you understand this? Now let's take one more example. Yes, let's take this example. This is previous day's value area. I'm just trying to explain a different scenario. Simple. Okay. Previous day's value area. Next day, look at this. Price is opening outside value area, auctioning outside value area, but still price is sideways. Nah, markets are sideways. How and why? Don't only look at previous day's value area. Look at, we have one more untested value area. If you remember, I have used the word untested value area is also given same importance. Untested value area. Now price is inside untested value, even though outside previous day's value area, but inside untested value area, markets going into sideways. Next day, still this value area high has not been cleared. Again price is inside value area. So here almost 70, 80 to 90% of this value area has been auction. Price has spent time. Again price into a sideways. Again price into a sideways. Simple. If you have a question in your mind, you can post your question in the comment section, and also one basic question definitely is how to identify value area. Simple sir. What I will do is, I mostly track Bank Nifty and few limited stocks. So I will make sure maximum try to share every day's value area high and value area low level in my Telegram channel. So you can mark it down the levels and you can start practicing. And one more important here is, this learning which I am sharing is completely with my, from my experience. I am not claiming here that this will work 100%. This is just one perspective of identifying sideways market. Because for example, likewise on Friday, yesterday's market, what happened? Up, down, up, down, up, down, only sideways market. Entire trading session was sideways and premium was completely decaying, eroding like very beautifully. Okay, what is happening here is, all the buyers and sellers are being trapped, because look at this first 5-minute candle. And important here is, many retail traders get trapped by the candle color. Very worst trading practice is to take a buy trade or take a short trade just because looking at this kind of big colored candle, big green colored candle, big green color. Look at big green color, big red color. Shorting because big red color and buying because big green color. One of the worst trading practice. I don't know who is teaching this kind of trading style, because nowadays there are many trainers who are just looting the retail traders by I will teach this strategy, that strategy. Okay, try to understand this doesn't work in the market. For example, look at this. And one more thing, buy above day high, short below day low. This is one of the blunder mistake. Every time this can't work. Important is understand the auction and then plan a buy trade above day high, plan a short trade below day low. What happened yesterday? Looking at this red color candle, if you have taken a short side trade, next 10-15 minutes your stop loss got triggered here. Because this upside moves 250 to 300 points. Okay, and just because this is the day low, just because day low is broken here, if you are shorted here next 15 minutes 300 points stop loss gone. And just because price is breaking day high, if you have short bought taken a buy side trade, next 15-20 minutes your stop loss, if this down moves again 400 points, 350 400 points, your stop loss is gone. And now markets are sideways here. If looking at this sideways, we are getting a breakout. Above this breakout candle, let buy. What happened? Slow sideways, price came down, your stop loss is gone. Now look at value area, the concept which I have shared today. Now look at the concept of value area, where price is trading inside multi-day back untested value area. So now what is making you to be so aggressive to plan a buy side or a short side being an option buyer? This is my biggest question here. Because price is inside the value area, man, because buyers and sellers active, more active zone. So possibilities are there can be a sideways mode or there can be a stop hunting mode. Even in the Telegram channel morning, I have posted an update stating that don't be in an hurry to plan a buy side or a short side trade in the market. Okay. Very simple. Entire day markets were just roaming up down up down. Simple here is option buyer, or I can add on a future trader also. If like in this trade, this kind of trading session is enough to make you a loss making day, or frustration will be created because you would have taken multiple trade. For example, you have taken, let's assume you have taken a buy side trade here, market is moving down, stop loss triggering, reversing back up. Looking at this upside auction, if you have taken a buy side trade, markets are reversing back, making the new day low, triggering stop losses. Looking, the traders were from morning, they have not taken any trade. Looking at this down move, shorting, price reversing back, triggering their stop losses. Up down, everywhere stop losses is getting triggered. Okay, so understand when to trade and when to stay away from the market. If you're an option seller, this is a fantastic day, man. This day is a money making day for you because theta decay was fantastic, with VIX dropping 8% drop in the India VIX, and for an option seller a drop in VIX, sideways market, prices inside value area, and what else? It's just a fantastic day for an option seller. Understand your trading style first, then go and take your trades.